Welcome back to Face the State. I'm Arianna Bennett. Thank you for keeping it here. I am back with Professor Elliott Parker now, talking about our economy and what to expect out of it this year and the next few years. Thank you again for coming on the show and helping break down this complex stuff for us. And we saw recently the report that the GDP shrank in the first quarter for the first time since pandemic era shrinking. You mentioned earlier that you do see a recession coming down the pipeline. What would that look like in terms of timing? What are the signs you look for? What will people feel?
So I don't mean to say I see a recession coming down the pipeline. What I'm saying is economists in general think that the odds now are greater than 50-50.
Okay.
Right? But there's a lot of things that could happen. So we don't know the future until it's already happened, right? None of us do, and as much as we might pretend otherwise. But what we should expect is we're hearing stories of, in the ports, like ports of Long Beach and Port of Los Angeles, we're hearing stories of cancellations of ships coming from China that are not coming, or they're coming mostly empty, right? So they're expecting a big drop-off. Now, this is coming after a large increase in shipping. Now, why was that? Because many firms anticipated this happening. They got some warning, and so they went out and bought as much as they could. You know, as much as they can get shipped over here, they went out so they could build up their inventories. And that's what we saw in the GDP numbers for the first quarter. We saw a huge jump up in imports of merchandise, and we saw a real big buildup of inventories. Like, consumer spending wasn't that different than it had been. Now, there was also increased purchases by investors, right, of firms in equipment. So there was some purchasing of equipment, purchasing of inventories, but it was coming from imports, not from domestic production. Now that's ending. And so we're going to start seeing less coming in. And so it's going to take a couple months to get through that inventory, right, that they built up. But we should expect, say, by the middle of maybe late June, early July, we'll start seeing that there's a lot fewer goods available in the United States, especially things made in China, where the tariff increase is huge. Other places like Indonesia, Bangladesh, right, Philippines, those aren't going to be, you know, the price increases aren't going to be that big. But anything come from China, if it's available at all, will be more expensive. And the worry is that we could start seeing empty shelves or rising prices come, or at least limited choices in buying things by midsummer. And then that could feed into Christmas, because it takes about 6 months for firms to order the goods they're going to buy. And we buy a lot of stuff from China to sell in the stores at Christmas. And so if stores and companies that import aren't sort of certain of what's going to happen by, say, June, July, then they won't be ordering, and we may get into difficulty. Now, I'm not saying we will. Nobody knows the future, right? But right now, it looks like it's getting really hard to turn this back.
And then when we have lower supply, the prices of what we do have will be higher.
Yes. And it's not just imported goods, it's also the domestic goods that compete with them. But it's, you know, imported goods are one thing. We're also going to see a hit on the goods we export, right? Because we trade both ways. You know, yes, we import more than we export, but the goods we export, like, for example, soybeans, right? We're going to find all of a sudden our markets are drying up, and we're already seeing that, right? So you're going to have farmers screaming bloody murder because they were hoping to ship goods. Now, this is not the peak exporting period for most agricultural products, right? Most of that's going to be in the fall. So if we're still doing this in fall, you're going to have a lot of American farmers with no markets. So we're going to see that happen too. Now that will make soybeans really cheap in the U.S., right? Because there's no foreign market for it. So some things will get cheaper. Goods we export get cheaper. Goods we import get more expensive. Now, will that cause inflation? Well, certainly I think for consumers we'll see inflation, in the sense, because especially lower income consumers, they're more likely to buy, they're going to spend more of their money on goods, and they're more likely to buy goods made in some place like China. And so they're likely to see a bigger impact.
Right.
But, you know, going to the doctor, that's not going to change much, right? There's a lot of things that won't change. Services won't change, and that's most of what we spend. And then whether that continues will depend on what the Federal Reserve does. But the Federal Reserve will have two problems. One, they'll have some rising prices, especially in imported goods, and they're also going to see the economy slowing down if economists are correct in that prediction. And then they're kind of stuck. What do? Do they try to stimulate the economy and cause more inflation, or they try to tighten the money supply and cause a deeper recession?
Oof. So then if you're an individual watching this thinking, what in the world do I do with this information? How can I safeguard my assets? How can I plan for, if they're planning on retiring sometime soon? What's your advice?
Well, Warren Buffett generally likes to give the advice that you don't try to time the market. You don't try to buy and sell and do day trading and try to figure out exactly which asset to get in. At some level, the best attribute is a little bit of patience. Because if this happens this year, it should settle down in a year or two. Now, does that mean we're going to come out of it growing? Well, look at Brexit, for example, in the United Kingdom. They decided to pull out of the European Union and the amount of trade. Now, it wasn't as dramatic as what we're doing, right? But it was still dramatic enough. And what you've seen is that the United Kingdom has grown much more slowly since they implemented Brexit than before. So we're not likely to see like a deep recession like the Great Recession or anything like the pandemic in terms of that hit. But we may see, a mild recession for the next year and then relatively slower growth for the next few years. And then we'll see where this goes. So I would just say hold tight, try not to put anything into, be careful about what risks you take, right? I wouldn't necessarily go for the most risky, most attractive stock, because when you look for the highest return, that usually comes with higher risk. And this is a very volatile time that we're going to be seeing. So I would just sit tight, try not to make any stupid decisions. The last thing you want to do is sell a lot of assets at a really low price. Rather wait for things to sort of settle down and bounce back.
Yeah, makes sense. All right, well, we just have about a minute left, which I know isn't a lot of time, but just really quickly, with your magic wand, your economist magic wand, if you could right the ship, do the best possible economic policy, what's your move right now?
Declare victory and move on. I would say, okay, I've made my point. Or basically what I would do is I'd push Congress to have Congress get involved and get Congress, basically setting trade policy like the Constitution said it should, right? So if you could figure out a way, if the president could figure out a way to sort of declare victory, I've made my point, now it's up to Congress to decide what the next trade law is, and then let that happen, I think things would settle down relatively quickly.
And people probably maybe feel a little bit more confident in the consistency factor.
Yes.
All right. Well, Dr. Elliott Parker, thank you so much. I so appreciate it. I feel like I just took your class and I would like 10 more.
Okay. I do actually teach a class in this subject. So.
Yeah, I know. I think that we would all be richer for it. Thank you.
Thank you.
Well, that is it for this episode of Face the State. But for more information or to see past episodes, you can head to our website. That's 2news.com. Thank you so much for being with us. We'll see you next week.